Great, great, great. Okay, let's get started. So today we're going to focus on a couple things. We will we'll certainly focus first on identifying larger time frame opportunities. Every time we switch markets, I'll start by looking at identifying larger time frame opportunities, and then we'll drill down to the smaller time frames when there's something to look at and something to trade. Okay, so let's start with the U.S. dollar, however, and we'll go bigger time frame. I think this one's key. I didn't really want to have all these lines on here. Let's go with the. There we go. Okay, ignore these two lines because these are on these two sets of lines right here because these are on smaller time frames. But here at FX Street, we actually put these three yellow shaded boxes, these levels on, many months ago. And all that's happened since then is we've bounced from kind of one to the other, and now we've just been stuck in the middle of both. Okay. But when you look at this, you think, big picture, where's the dollar going? Well, obviously, we've touched this top level, we've touched this bottom level. But which, where is the dollar likely to go up through this supply level first or down through this demand level first? And I would argue that it's probably likely to go down through demand, yes. And that's not because of thinking of any fundamentals or anything like that. It's simply because what you want to do is, neither are fresh, but what you want to look at is when you have, supply and demand levels above and below. Look at how deep prices went into each level. Right? So here we kind of barely went into this level and turned. This was a good one. But when we came down to this one, you went almost all the way through it. If you look, a wick comes all the way down to the bottom line and then turned. So I would argue that there's probably not a lot of demand left here, and we'd have to go to smaller time frames to find any demand below this. I would argue that prices are probably likely to go lower, below 79, below 79.50 before going higher. Then, let me go to a larger time frame. I should probably do this. I'll do this on a different chart. Hang on, just a second. I don't want to lose those lines, but those lines will confuse us in the bigger picture. So we'll just do it here. There we go. Now let me bring this chart to a monthly. Okay. Again, not a ton to look at here, but we've been basing at this level, really chewing it up with this cluster of activity above. Again, this suggests prices. We do have some demand here, but if this was strong demand, prices would not be here for 1, 2, 3, 4, almost 5 months. We would have taken off that level. Make sense? So, okay. Yep, Ray, I see what you're saying there. Maybe some people would suggest a head and shoulders. So if there is a head and shoulders here, what you want to do, because we know everybody else will short a head and shoulders on a break of down here, so we want to get in before everybody else. That's the whole point of trading, right? Proper trading. So we want to get in on a rally into supply. So we'll find that on the smaller time frames right here. Let's go back to the dollar chart. We can look at a 30-minute chart, 60-minute chart, either one. But we see we have prices down into demand here. But if you look closely, it's into demand, but we've been here once. Now we're back here again, and we're just basing here. You could almost argue that supply is forming just above, right? In other words, there's probably not a lot of demand left. Okay. So, nevertheless, we could get a little bounce out of this area. The really quality supply level is up here and just above. And I know these are far from current price, but I would certainly have these on your charts. If you're trading Forex, which I'm assuming most people are with us today, I would absolutely have these two levels in the dollar on your charts. It looks like these are far away. Prices could be here in 20 minutes, half hour. It's not that far. It looks far, but it's not a big deal. And the fact that you have nothing really here tells me that when prices do get back into this area, they can really move quickly. So don't think that those prices are too far to even pay attention to. So that'd be about 80.35 to 80.45, and then 80.55 to 80.65. Okay, so watch those on your 30-minute chart of the dollar. And if and when the dollar gets to those levels, I would be looking for the euro and related currencies to be close to demand for buying opportunities. Okay? All right, let's move on. Let's go back to euro-yen. We'll start there. Brad, we'll look in a little bit, but yeah, they should line up pretty well. Yeah, the euro-yen has been really moving. So let's take a look at this one, and let's start with the larger time frame. When we do, I think there was some supply here coming up. Yes. So take a look at this. Now we have to include this wick up here, but this is really the first area of interest that this market is running into. Okay, right here. So watch for that. And to determine whether this is going to really fall from this level or not, we would go down a time frame or two and see what's below. On this time frame, it looks like the market could just collapse, but there might be some demand in here that we need to deal with. So let's look for that. And there is. Okay, when we look at the daily, I probably don't need to blow this chart up. This is not, like a great demand level that we would buy at. Or, you could, but my point is this is probably going to be a stopping point on the downside. So now this is quite a bit lower. So on the daily, we don't have any demand until about 115, and we're well above 119 at the moment. Okay. Someone's asking why not. Just because a lot of trading activity here, and again, if you're new to the session, you might not understand the whole supply-demand concept yet, but the more trading activity at a level, the less out of balance supply and demand is at the level. Okay, that's all. Okay, so let's go down to a smaller time frame. Okay. And again, here we see that this is that big demand area. Now there's a nice area to buy it, but again, it's quite a bit lower. I just want to quickly see if there's anything. Adrian, you shorted the first pullback, okay? Yeah, so when I go down to the smaller time frames, it looks like there's room for this to fall potentially down to 118 or just below 118. And since the demand is just below 118, I would say a good target is just a touch above 118. You always want to, if you're short, you want to get out just before the demand level, not at the demand level. Okay? All right, so if you shorted the first pullback and you're looking to hold, you've got some room in here. This would be your profit zone, and I would look to get out of that just before 118. Let me just make this a blue line. That'll be for a potential target. Let's see here. Yep, I just moved that right there. Okay. Always leave a little bit for the next person. And the reality is the reason why we don't want to, if we're short, why we don't want to get out at the demand level and instead get out just before the demand level is because at demand there's going to be competition to buy. Okay, so if we're buying, we don't want to buy when there's competition to buy. We want to buy when there's competition to sell. We'll just get filled that much easier. Okay. All right. Let's keep going. Why would it not break the 120 level? It probably will, but this is the first time back up to that area. So we'll probably get a little pullback before we, we need to, prices come all this way. So think about it. Who's buying here? Whoever's buying here today, right now, is buying after such a huge rally in price. And they're buying into a price level where the chart told us supply exceeds demand. This is the first pullback into this. Okay. No, this is not the futures. This is the spot. You're probably not going to trade euro yen in the futures. Futures, forex futures are great, but once you get outside of the majors, there's not a ton of volume there. Okay. All right. Yeah, Luca. If we start, we want to make sure that we're not. If you start saying one bar or two candles is okay, then everything becomes a level. We want very little trade. We want the picture that represents that there's prices stalled and there's a real that kind of battle going on. You clearly see that buying and selling is going on at the same price point, but not too much, right? And then we want to see a pretty strong move away from that area. Okay, because that tells us that there was enough supply or demand to stop price, but then there's a big enough imbalance to keep it going or reverse it. Okay. And a retail trader is never going to be able to create that scenario that I just said in the market. So that's how we're able to. That's our trigger that we've identified where institutions are very active. So then once we do that, we want to say we know institutions are pretty active here and very interested, but what are they doing? Are they buying or selling? Do they have a lot of buy orders, a lot of sell orders, right? And then once price moves away, by looking at how much time price spends at the level, then we're able to determine, how many orders do they have left? How many orders were filled and how much is left? What's the level of imbalance? So that's the whole point for that. The pivots are moves into these areas already. No, I'm not saying 30-minute demand is enough to stop weekly supply. No, but that 30-minute demand is going to be a stopping point. All right. Let's move on to another market. There is one though. Where is it? Is it euro? There's a small time frame level I had here. We don't have to take a look at this one. I put this up a little bit ago. Yeah, we'll keep going with these, Luca. And also, too, make sure you kind of review some of the other webinars. And I think we'll probably get ready to do. We'll have to set this up, but a 2 or 3 part series, really kind of back to basics and the whole lesson from the beginning, because there's always parts that that people miss. So here's a little level that I found this morning in the euro. Okay, Brad, you took this trade, so you're sitting on this one. All right. Okay. And Luca, if you can, mark up, take a chart, mark it up, and send me that in a question. That way, I'll be able to kind of focus on it, and I'll clearly see what your question is, and I'll get back to you there. Yeah, so here's a level that came up in the euro, hit a little while ago. So just keep an eye on this one. I would think it's not really collapsing right now, just because there's a lot of activity in here. But if you really look inside that activity, there's not a lot of fresh demand in here. The fresh stuff comes in. Move the chart over. If this is just a little short-term trade, I'd look, I'd expect this to bounce, just under 50, maybe 48, certainly 46. I'd look for this to bounce higher. I'm saying if this is a short-term trade. The next area in this chart that I would be a buyer for a long would be right down here. Again, this may look far to you, but it's not. I think price can get here pretty quick. Okay. So this is the area where we'd say, you know, banks are buying, and we can buy too. And you know, if the trade doesn't work out, not a big deal, very low risk. Okay. All right, so there's the fresh area of demand to buy against for a long. But if this, you know, continues to roll over, this area right here is probably going to be a problem. Okay, the 65, 67-ish. Anyway, just wanted to bring that euro to your attention, but it looks like a bunch of you found that already and have shorted it. Okay. So that's a good question, Boyke. Why don't we go over that? You want to go over that with this one? We can do that. So this is a 10-minute chart. Let me just bring this down to a 5, make it a little more clear. So Boyke had a good question. How do you choose levels? Well, price is right here. Let's go with the demand. And this won't take long. It'll just take a few minutes, and then we'll go back to the analysis. So price is right here. You know, what we want to do is to find where the next area to buy is below. The question is where's the picture that represents where banks and institutions are buying. Now, I started on that side of the business, so I kind of just trained my eye to do that a long, long time ago. But for many reasons that are in the odds enhancers we talk about, you know, that level would be down here. If I go to a 2-minute, there's probably going to be a little level above that. It's pretty much the same area. All right, so we start with current price, and we go down the price ladder. Okay, we go down the price ladder until we find a fresh demand level. And the key word is fresh. You hear me say fresh all the time. Fresh means that since the level was created, price has not been back there yet. Okay, since the level has been created, price has not been back there yet. So if I keep going down, right, until I hit bar price right here, I'm going to go down again. That's not demand. Go down again, left and down. Maybe that's a demand level, but we've been back there already. So I'm going to keep going left and down. Maybe that's demand, but we wouldn't take it because it's not fresh. Price has been back there. See what I'm doing? So I'm going to keep going left and down, left and down, left and down. Do you see how I'm not, none of these are fresh demand levels? And I'm going to keep going left and down. But what about this area? I wouldn't call this a demand level to buy against because all that happened here is price went up, came down, went up. So I'm going to continue to go left and down until we get to this. A clear cluster of trading. You can almost wrap a box around. Okay. Price left the area, and since it left the area, it has not been back here yet. Okay. So I'm going to a little box around that. Now, how we draw our lines, I'll bring that up in a lesson because it's kind of a full lesson. It's very important, very rule-based how we do this. But that would be how we arrive at a level. One of the big things in the trading rooms at Online Trading Academy, the XLTs, is we don't cut through candles to arrive at supply or demand levels, which is very different from conventional support and resistance. You know, there's like 4 key differences between how you do the supply-demand thing and conventional support and resistance. Okay. So then the way we enter the position is this. Let me put this in. And here, let me put that in. So the red line would be the stop. We're going to buy at the top line, right there. Whatever price that line is at, which is 133.10, with a stop right there at 04. Whatever the distance is, so here we have a 6-tick range, then we're just going to adjust our position size so that we're not losing more than we're willing to lose. Make sense? Okay, that's key. Now, if you're just now the target, okay, can be a number of things, and I'll go over that real quick. You want to make sure that when price comes back to this level, that your first target is at least, you know, if the risk here is 6 ticks, I want to make sure the target is at least 12. Make sense? Okay. You may say, you might only want to take trades where the target is 3-1. So you need to target 18 ticks away or 20 ticks away, something in that range, right? Okay. And the whole point is, if you're just taking fresh levels, okay, you know, the odds are so high when it's a fresh real demand level with a good odds enhancer score. The odds are extremely high. So then you just take every trade. Take every one of these you find that meets your criteria, and that's it. You're just looking for the same picture over and over and over. Someone asks, is this a level on top of level? Yeah, I would say it is. You kind of have this area down just below. Okay. We wouldn't expect prices to just collapse through this area. Anyway, I didn't mean to spend that much time on it, but I know there were a couple questions. Boyke had the question and another one. So hopefully that was helpful. Let's move on and let's go to another market. I think we're looking at the pound. Okay. And we'll do this again in a much bigger kind of lesson and application session. All right. There is a, let me see here. Let me bring up another market real quick, just because of what we just went over. Let me see if this opportunity is still available. Give me just a second here. Now this is not a, look at the DAX go. Oh, they're all going. All right. Look at that. Now that's a move. I don't know that I've ever seen that. Okay. Dollar not really moving. The DAX is flying at the moment. Let's see what we can find here in the DAX. Okay, so watch the DAX up here. I'm just coming to this one. Let's take the upper part of that range. Now again, I want to look a little bit more at this before we get thrilled about this. That's fast. It's funny that the timing of that. I don't have another computer next to me here, so I didn't know that was happening. But I saw my notes next to me. There was a DAX level in the 20s and 30s. So maybe this isn't it. Let me look at other time frames. Hang on. I'm not sure this is the one. Let's see what we have here. 30. All right, maybe it's this one. Let's go to the S&P too, because these are really flying. The S&P level. Oh, I think we're just back at the highs there. And one more, the Russell, which interestingly did not really move much. This is the one that usually moves. That is not much of a move at all. Dollar continuing to kind of just press lower into that, well, it's just kind of bouncing here, but notice no big move here in the dollar. In the Russell, yeah, I love trading the DAX. The DAX is probably one of my favorite markets to trade. It really moves, and you just got to get your levels right. That's what I was saying. Hang on, don't just jump into it. Okay. Yeah. Yeah, Boyke, we'll get back to. I know we looked at one. We'll look at more in just a moment. And just want to run through these real quick. All right. Yeah, let's get back. It's easy to get caught up in other markets. Let's pull up the pound. Don't just jump into the DAX, though, if you don't trade the DAX. It's a very big money market that really, really moves. Okay, if we look at the pound, let's start with the larger time frame. There's the weekly chart of the pound. Doesn't look all that different than when we did this last year. Not a whole lot to look at there other than, we do have some demand down here. The area that can launch the next move higher is going to be found in here, and you'll see on a smaller time frame it's in here as well. But not a whole lot to look at there. Let's expand the daily. I think the real opportunity is going to come when we get to the 240-minute chart. Chuck, yeah, I think I know what you're talking about, but all we're doing is really, again, just keeping it simple. Where's the buyer? Where are the buyers? Where are the significant buyers? Where are the significant sellers? On the daily here, not a whole lot to look at, so let me just take you right down to 240. This is the opportunity. That I want to share with you here. So in the pound, we've got two levels sitting on top of each other here that, according to our rules, are very significant. So we've got one here, one sitting just above. Yeah, these look. So watch for these. Okay. Now the pound has a little ways to go to get there, but from there, the pound can move down to here. So this is kind of that bigger picture move that we're looking for. Okay. So the likely scenario for the pound, big picture, is if and when price gets up to here, for a move back down to the 159.50 area. That's the likely scenario when we look at fresh levels and the opportunity. This is the spot, yeah. I haven't really looked at much futures as far as currencies go. I'm trying to stick to spot today. I know we look at a lot of the futures, but we'll try to stick to spot today. Here's the yen. Okay. There's that little 5-minute level I think we drew out earlier, or I might have had this on from early this morning. We may not have looked at this yet, but watch that one. Yeah, so the yen is, this is where the yen is, but the yen's got a little ways to go before it gets to anything very, that interesting in this time frame. But I don't want to waste time there. I want to bring you down to the daily chart because you'll see a little bit different picture here. Let me expand this. Okay, so here's where the yen is, and it looks like, to me, it looks like the yen can go a little bit higher. However, the first time it's going to run into a fresh level is going to be, now this is not the perfect level, believe me, but it's, I would be very surprised if the yen just went right through this. I'd be shocked. Okay, so we've got a little ways to go to get there. But if you look at the yen, it's been on this tear here, it hasn't hit anything fresh. There's been no fresh supply here. That was a real nice supply level, but we've been back there 2-3 times. Make sense? There's really not a whole lot in here. So the yen can go a little bit higher, but this is where we'd expect not only the yen to stop rallying, but also reverse. Okay, and this is pretty big picture. This is a daily chart. So that comes up in the about 91.30. Okay. So watch for that one. And then if you look at how this rally has been made, I'll show you here. If we come back down to, let's look inside this rally. No, let's just go to a 60. Because once you identify that, okay, there's a reversal area, right? Well, where's it going to reverse to? How much room does it have to fall? To answer that, we want to see where the fresh demand levels are below. So, looking at this chart, again, there's not a. You can have a little area right in here. You know what, let me just take it to 30. It'll clean it up. There we go. Okay. So once it gets to that level, you know, there's room for price to fall pretty easily down to the 88.60 area. Okay. And that would be, again, 88.60 from our 91.30. That's not bad. That's a nice bigger picture opportunity. It'd be great to start the year off with a trade like that. Yeah, let's go over to gold. Gold is collapsing. Nice big drop here. Okay, whoops, didn't want to do that. And let's go to 60 minutes. Okay. Yeah, gold had some nice levels up here. I wouldn't expect this pivot low to stop gold from falling. Okay. I would expect this level though to, you know, gold is likely to bounce from here. That would be about 1672. Yeah, let's look at the larger time frames here. I'll probably just stick to the same chart. I keep bouncing around the charts, but let me just do it on this one. So if we look at the monthly chart of gold, it's not going to show us much. I look at gold every day. Weekly, there we go. Okay. You know, we've got a lot of basing here, but all these pullbacks are into this demand level. So if you notice, each pullback, it's subtle. But here's a pullback into this demand. Here's the next one, which goes lower, and it goes lower because there's less demand here, less buy orders, right? With each pullback, you know, the demand is decreasing. And we had another pullback that went even deeper. So the level below that would be down here around 1450. Okay. This level here we're kind of basing at, but there's some supply above, so yes, you can get a little bounce here, but gold's likely to go a little bit lower. Here, well, let's look at the daily though. Here's what I wanted to show you. The level we were looking at last time, if you remember, was this one. Now, I don't know if we came all the way back to it, but when you're talking about fresh levels and the next move, that is a key level, right? This level right here would score out very high on the odds enhancer list. Very high. So, and when you look below, there's really nothing fresh until you get down to here. And we've actually kind of been back there once. Well, not really. So, you know, gold is probably going to stay between these two levels in the near future, but I would argue that it's more likely to come down to demand than go up through supply first, which is the main question. Okay. Yeah, so you have come back to this supply level, but notice you barely touched it. Now I'm drawing our lines completely in line with our rules. So we just came back and touched it and fell and collapsed. So that's another kind of clue that, you know what, there's a lot of supply there. Okay? So that's kind of the outlook on gold. Not a whole lot to stop it from falling, and some really key supply above. Okay? All right, let's get back and look at another currency here. How about the Swiss? We never look at the Swiss. Never. The Canadian, sure. We hardly ever look at. We always want to. Yeah, we always want to get to the Canadian, but we never do. Let's look at that. So the Canadian on the weekly, and I'm just going to kind of skip to where the opportunity is. What's really driving the big turning points in the Canadian, again, if we just stick to our rules, let's start with big picture, because that's kind of what this session was supposed to be about. We'll do a lot more of this next session. I know we didn't get to. I had a bunch of stuff set up in the big picture we didn't even get to, but that's okay. Big picture's not changing anytime soon. These are the two levels that are, you know, big, key, and significant on the larger time frame. Okay. All right. Oops, sorry about that. Okay, so these are the two levels that are driving things in the big picture. And so let's come down to this 240-minute chart. And the opportunity here, again, there's really nothing to stop this from falling, and there's also not a whole lot to stop it from rallying up to here. You're kind of in the middle of key levels. So for that, I would take my cue from the U.S. dollar. I mean, I would trade the Canadian almost off the U.S. dollar chart in the big picture. Okay. So it looks like the dollar is getting the bounce off this level. But again, it's got to, it's got to clear this. Okay, that there's, it's been struggling to get through this. So once it gets through this, it can move, but it's still got this. It's got to get through this. If we go back to let's take a look at our euro. I know a bunch of you were in this trade. Remember, we're getting really close to this little level here. Remember, you're likely to find some demand in here. So if this is just a short-term trade for you, you're looking to catch a bounce off this. You're I know a bunch you got in at 73, you said, I think. So you're up almost 20 ticks. Just remember, you could get a bounce here. So you might want to get out of part of your position at least just before this level. Make sense? And it's always good to buy into weakness when you're short, sell into strength when you're long, as you reach that opposing level, if that makes sense. Okay. Matesh, good question. It depends what your plan was. I would just stick to the plan. Some people are into this just for that short-term income, those short-term trades. Other people are holding for bigger moves. Because again, if you come to, the 2-minute, you really don't have a key fresh demand level till down here, till 31. We're only at, right? Oh, I'm sorry, there you go. Normally, I don't have multiple targets myself, if that's what you're asking, Matej. Normally, I don't. Okay. But there's nothing wrong with having that. Let me fix these charts. Again, this dollar is key. Like I said, if you're going to trade the Canadian, because the low is just not clear there, I would do it almost exclusively off this dollar chart. Okay. And don't forget, I know it seems far away, but keep these two levels on your charts. These are key levels for the dollar and for markets like the euro, obviously. Kellner, yeah, I would keep them separate, but okay. You know what else we could do here? I don't know why I didn't do this before. So there you go. Okay. So if you're in that short-term euro trade here, right? If you're looking to take it for a short-term trade, here's another level that's going to give you trouble. This one's almost certain to give you a little trouble. Okay. The dollar gets up to 79.75, or actually maybe a tick before that. I would probably take some profits on the euro if your intention is for a short-term trade. Okay. And all we're doing, again, is going to different time frames and different markets and figuring out where are the buyers and where are the sellers. Significant buyers and sellers. Remember, we want to separate, and the thing that we do at the core of our strategy that we go over, we're separating retail novice traders from profitable banks and institutions. Not every bank and institution is profitable. All right? All right, let's go to. Oh, here we go. Hang on a second. Yeah, these markets are just kind of still creeping higher. Not a whole lot to look at there. Sure, we can take a look at that one. Okay. So I'm going to skip through down to the daily because the weekly is not going to really show us much. There's the pound against the Aussie. So again, if you look here on the downside, and we always start with larger time frame and quantify where our fresh supply and demand levels are in the larger time frame, simply because we have to have the curve right. We have to know where price is at on the larger time frame supply demand curve. That's key. Okay, we have to do that. Okay, so there's where our demand is below. And let's figure out where our supply is above. And because it's not clear on the daily, I'm just going to go right down to the next smaller time frame we have here, which is this 240. I'm going to go right up here. Okay. Now, there are plenty of times where we take the rally-based drop, drop-based rally, the big pivots, as levels. But again, I'd rather go over that in a lesson first. Okay, so for me, now the combination of these two larger time frames right here, and I will keep these on these charts for quite a long time. There's where our fresh demand is below, larger time frame. Here's where our fresh supply is above, larger time frame. So now the question is, where is price? Is it closer to the bottom, closer to the top? If it's in the middle, then we could go down to smaller time frames and look for both longs and shorts. Make sense? Okay, but that's why you do that. So because it, kind of is, let's see, 55 is going to be okay. Kind of is right in the middle. I can go down to smaller time frames and take both longs and shorts. Okay. All right. So again, this dollar did not get through this level. It may now, but it could very easily come back down here first. So watch that. Okay. Let me do this. Okay, I just put my email address in there, sseiden@tradingacademy.com. Our next session, I have a new structure I'm going to kind of go over with you for our session. So I think you'll like it. I think you'll find it very helpful. We'll kind of roll that out next session. And look for that on the calendar. If you have any kind of basic questions, you can email me. You can always look at some past recordings. And hopefully that was helpful. And again, if you're in that Euro trade, watch this 79.75 area and also the demand in the Euro. Nice job on that. And I'll talk to you later. Have a great day, everybody. Thanks.